provision for bad and doubtful debts. This module is the first module for this topic. And as usual, I don't know why students get afraid of few chapters or few topics. This topic is also among those one. Am I right? Well, so no issues at all, no more fear at all. You are in safe hands now. This provision for doubtful debts and the bad debts is the chapter in which we will see that how to account for the bad debts, discount allowed, provisions for doubtful debts, and provisions for discounts allowable. So let's discuss what are the bad debts in fact. Bad debts are in fact the debtors which are bad. Simple as this. Okay? Means we have decided or the circumstances have told us that money is no more recoverable from these debtors, from these accounts receivables. So these are bad, irrecoverable debts. And when we say doubtful debts, these are in fact the debtors, the accounts receivables, for which there is a high risk that we will not be able to recover from these debtors. So accounting is based upon a pessimistic approach in which the accountant is very much conservative. Why conservative? That whenever the accountant sees that there is a chance of loss to happen, that accountant at once makes estimations and account for that loss. So as far as bad debt is concerned, it's a loss. Straight away it's a loss. So obviously the accountant has to account for this loss against the fall in the amount of receivables. But whereas this doubtful debts are concerned, straight away it is not a loss, it is still a receivable. But accountant sees that there is a difficulty in its recoverability because of some reasons. We will look into that. So that accountant is expecting that there would be a credit loss. This is known as credit loss, something for which we are not sure that we will be able to recover. So against this expected credit loss, the accountant creates a provision. So we'll see what accounting entries are passed for these bad debts and doubtful debts. So first of all, debtors written off as bad. For this, straight away we debit bad debts as an expense and we credit debtors account as a decrease in asset. And then when we have to create a provision for doubtful debts, as I just discussed, that it is also taken as a loss based on a pessimistic or conservative approach, the bad debts account is debited for this provision for doubtful debt as well, and a provision for doubtful debt account is credited against it. This provision for doubtful debt account is in fact an account which is contra to accounts receivables. When we are saying contra to accounts receivables, it means that this is in fact our account in the nature of credit. Well, so this is credit nature account. Therefore, we have to credit this. This is contra to asset, obviously. Then what happens if there is an increase in the provision? In fact, basically these are the two accounting entries. Okay. Bad debts, debit and debtors credit for the debtors to be written off as bad. And the second one is to create a provision for doubtful debt. For this, again, bad debts account debit and provision for doubtful debt account credit. But now for the next years, for the subsequent years, what we see that this provision for doubtful debt balance increases or decreases. So if there is an increase in provision for doubtful debt, again, we will pass the same accounting entry, debit to bad debts and credit to provision for doubtful debts. We will learn its concepts in the upcoming section, but as of now, just go through these accounting entries first. Then if there is a decrease in provision for doubtful debt, obviously there will be a reversal of this accounting entry. This accounting entry will be reversed exactly. So bad debt account will be credited now and provision for doubtful debt account will be debited. Okay, let's discuss what if bad debts are recovered. Obviously, when the bad debts will be recovered, means we already have passed this accounting entry, means we have taken that accounts receivable or debtor as a bad. Now, what happens that that person who was treated as a bad approached us and saying, please receive this cash from me. Would you say, no, we have already taken you as a bad debt? No. You will say, okay, please give cash. Okay, so if you are receiving cash, you will debit bank account or the cash account, the same thing. And you will give credit to the bad debts recovered account. This bad debts recovered account is in fact a decrease in this already recorded bad debts. So this bad debt recovered account will create a decrease in the balance of already recorded bad debts. Sometimes this question arises that why not we debit bank account since we are receiving from debtors and we credit debtors account for this bad debt recovery. It is wrong. Why it is wrong? Because you see the debtor has already been credited here. Okay. Means we have already reduced the balance of debtor because of the bad debts. And if we are receiving now cash against this bad debts recovery, we are receiving this cash from the same person, but that same person is no more our debtor because that has already been credited in the earlier accounting entry. So what does it mean? That now we are in fact receiving cash from the bad debts. Against the bad debts, you can say. From the bad debtors, you can say like this. Okay. So bank account debit and bad debts recovered account will be credited over here. Well, and now the thing is that we have to pass accounting entry for discount allowed to debtors, and discount allowed is our expense, debit, and it causes a decrease in debtors balance. So debtors account is credited with this discount allowed expense, or it is a loss in fact. That while recovering from debtors, we allow them, okay, don't pay this much amount. So don't pay this much amount means this is a loss. Okay. Well, now we have to create provision for discount on debts. So for this, again, discount allowed is debited. But here we will give credit to provision for discount. I'll make an analogy in these two accounting entries. Just see. Here and just see here. Yeah. For bad debts, we give credit to debtors against bad debts. For discount allowed, we give credit to debtors against discount allowed. For provision against doubtful debts, the same bad debt is debited for provisioning. The same discount allowed is debited for provisioning. Okay? And its reciprocal effect is given to the provision account. Its reciprocal effect is given to the provision account. So it's not difficult to memorize these accounting entries for bad debts and provision for doubtful debts, and for discounts, and provision for discounts. So the important tips to remember in this module are that bad debts and discount allowed are losses for the entity. Therefore, their main head is expense. And the provision for doubtful debt and provision for discount as well are contra to the asset. Therefore, the nature for these provision account is credit. Thank you.